Hello, everyone. My name is Phil Blancato, and I'm CEO and President of Latimer Thalman Asset Management, Chief Market Strategist for Osaic. Welcome to another weekly Market Impact. Well, here we are. It's kind of fun this time of year. I think it's the time of year where it's a little bit of a lull. The Christmas stuff is done. This weekend, I got my Christmas tree out of the house. It survived. It dried out more than I like. I do the real Christmas tree thing. But it did make a terrible pile of needles. No big deal. You get the broom out, sweep it up, put all the lights away, all the stuff away. That was a whole process. Then we sent Marcella off. She departed on Saturday morning at 12:30. Took off for Atlanta, and then she's now in Athens, full tilt, back to school. Luca, my older daughter, is driving as we speak. Just got through Washington, D.C., and she'll be on her way getting to Athens. It's a weird thing as a dad. When your kids travel, it's just strange. I keep an eye. I don't really do the find my friend thing, but now I do. I keep an eye on her just to make sure she's okay. On the way home, when she drove home for the holiday, she went through a terrible snowstorm. Thankfully, today it's beautiful, warm, and she should have no trouble. It's a long drive. It's a good 12-hour drive, but she's gotten past D.C., so only one or two more big cities, Richmond and Charlotte. Hopefully she gets past those and cruises right into Athens. Hope you had a wonderful weekend. Wild football. This year, I'll tell you what, pro football, I stole this from my partner, Jamie Desmond. Football is now played on Saturdays. I think she's right. College football is still a lot more fun. All four of the college football, the two football games that led to the final were great. Miami pulled it out. Carson Beck, Georgia, good for him. And a lot of Georgia fans don't like him. I still like him. I think he's a great quarterback and made a really good economic decision to go to Miami and make a bunch of money and now be in a national championship. Good for him. And then, of course, Indiana. Wow. I read a piece about Cignetti and his background, the coach. Just a great story. And obviously the quarterback, just really impressive guy. I mean, the Los Angeles Raiders, I guess I got to draft him. But Mendoza seems like a differentiator. Fun. I still think Indiana's going to blow Miami out. They just look like a pro team. But good for them. And then pros, the Buffalo Bills squeaking by Jacksonville last night. I kind of wanted Jacksonville. I felt a little bad. I know some friends down there. And I was sad to see that they're not going to make it this year. But all the other games were good. We got another one tonight. So enough about sports. I mean, you guys must get sick of my sports talk. But I feel like sports connect us all. In life, what are the three things we all can agree on? I think food. We all love to eat, right? You got to eat. So I think food's a fun we all agree on or have fun talking about. Then the other one is, obviously we love sports. Sports are fun. Sports connect us all. And maybe not everybody's into every sport, but there's probably something every person watches in some way or another. And I think sports are fun to talk about. It's a connecting thing. And the last one is music. I think music brings us all joy. Hopefully, whatever type you like. I think there's something to be said for those who connect. That's why I talk about it. Anyway, I hope you had a wonderful weekend. We're off to a great start of the year in markets. I did read a piece on AI over the weekend that I thought was kind of fun. As of right now, 62% of all adults are actively using AI once a week. I thought that was pretty cool. And in some cases, several times a week. I have become a ChatGPT fan and a Gemini fan. I use them both for lots of stuff. I mean, I find myself using it more and more when I want to go deeper into a topic. My refrigerator at home is on the fritz. So I asked ChatGPT to analyze it, and it gave me some good suggestions. Probably still got to hire someone to fix it, but I still think it was interesting to look at it from the context of it's growing. And don't get me wrong, there's still lots of hallucinations. I'll get into that in a little bit, actually. And I do think that it's kind of fascinating that we're using it in a way to better our life. I think that's the point of it, that it does help better your life. If you haven't tried it yet, give it a shot. You can just go into your Google search engine and you type in your subject, and it'll ask you if you want to do a deeper dive with Gemini. Just click yes. And it's right there in front of you. It's really cool. The way the numbers break down, just to read them back to you, of all U.S. adults, a lot are using it about 50% of the time. The other 50%, 45%, a little, and then it's about 10% not at all. So it's still a ways to go. And obviously the biggest cohort using it today would be 18 to 29-year-olds who are a bit more tech savvy. But I thought that was really fascinating. I know myself, I've become more and more reliant on it. You want to do something fun? Next time you're going to go on a trip, maybe it's a trip to see a friend or family that's an hour away. Type in where you're going. I'm going on a trip from Toledo to Akron, making it up. And just curious, along the way, what are things I should stop and visit and see? And watch the itinerary it gives you. Kind of fun, something different. So I think it is becoming a real part of our culture and only going to grow. All right, last week we had some data. The data that came out last week was all about job growth. And why that matters, you've probably heard me talk a lot about job growth over the years. But to me, job growth is far and away one of the most important things we should be focusing on. Why? Because job growth in the end really reflects the health of the U.S. economy on a very consistent and regular basis. Specifically, when people have jobs, they spend more money. When they don't have jobs, they obviously spend less money. But even the psyche around jobs, when people start thinking about, am I in a scenario where I can afford to make that next purchase? Very important. And the reason why, they have to be secure, they have to be confident when it comes to spending. And with spending being 70% of US GDP, I think it does matter. So anyway, non-farm payrolls come out last week, increased by 50,000. A decent number, not incredible. The unemployment rate did fall to 4.4%. Average hourly earnings went up 0.1%. That's a big one. And now we're up 3.8% year over year. Why that's so important is because when people make more money than the current rate of inflation, they're going to spend more. As long as they spend enough, the economy holds on. Said a different way, when we look at JOLTS, or the number of open jobs, that fell to 7.1 million from 7.5 million. And why I think that's important is because you still have a scenario where there's a number of open jobs, but the number has kind of got back to average. Here's a fun one. Hiring also fell to 5.1 million workers. And why I mentioned that number is those who were finding new roles compared to their old roles went from 5.4 to 5.1, meaning people who were hired, quit one job and went to another job. So it's very important to see that there's healthy turnover in the labor market. It means there's jobs available. What this all rolled up to mean was that for now, you're looking at a scenario where the job market is a no hire, no fire scenario. We normally add 125,000 jobs a month. Adding just 50,000, if you look at the stats over the year, it really was kind of fascinating that we saw the number really kind of tail off as the year went on. So while we added a lot of jobs, I did notice quite a few jobs were added in healthcare. So healthcare added nearly 700,000 jobs. And why that's relevant, that's far and away the most of any sector. You probably heard me say that healthcare was a dominant factor because people want to live their lives in their homes. We have the aging of the American population, and you put those two together, and healthcare is in high demand. And the reality is a big reason why we saw the layoff number weaken, or the number of jobs added be soft. I'm saying it wrong. We did lose 200,000 jobs at the federal level. So when you look at the year, the dominant winner was healthcare. And then after that came, call it government, to some degree, local government, about 125,000. And the rest was fairly muted. And that's where this no hire, no fire comes from. The industries that lost were manufacturing loss, professional businesses lost for the year, state government lost for the year. So while the labor market remains relatively healthy, we're not seeing a massive sell-off yet. Most importantly, we're not seeing rampant unemployment. That's what I was most worried about, that we get significant unemployment, and we just haven't seen that yet. That's important. But you do have one sector dominating all of this. And because of that domination, it's something to keep an eye on, because if the other sectors don't add jobs, not everyone can go work in healthcare, then I do think we end up with a bit of a problem long term. Okay, so that was the data for the week. There was one other very important data point, ISM services. I care a lot about ISM services. It represents how the service sector is doing, from new jobs, for cost and growth. And that hit 54.4. Anything above 50 is a expansion. Whereas December, it was a really strong number, up from November at 52.6. So 54 versus 52. That's a really positive sign. And it's a big reason why the market's holding up. You see what's happening right now. The market's somewhat optimistic about the U.S. economy. That the numbers around hiring are good enough. This week, we're going to get CPI, so we'll get new inflationary data, but the data we've seen so far has been somewhat benign. There's expectations that AI, I mentioned this last week, a wonderful productivity boost of nearly 5% for the fourth quarter. So what you're seeing is signs that the U.S. economy is doing well enough and the market's reacting appropriately. So when you look at the week, or really the year, it's basically 1 week. So year to date, we're up 1.8% on the S&P 500. That's a great number. The NASDAQ up 1.86. So interestingly, almost the same. It's a broader market. You know what the winner is? The Dow. Much broader. The love of other stocks right now, up over 3%. Mid-cap stocks, up 3.85%. And finally, small caps, the winner on the week at a whopping 5.75%. Woo! That's a big number. Very happy about that. Why I like that? Because I've been talking about buying small caps for a long time, and they are kicking butt. At this pace, in the next few days, if this continues, and that's asking a lot, but if it does continue, small caps on a 13-month basis would have beat the S&P 500. Why do I care about that? The trend is our friend, and we're actually seeing the growth there that I think is really very impressive. We saw some trade gap numbers come out that were interesting. The U.S. trade gap narrowed to the smallest since 2009. Why? We're seeing consumers switch to American-made products versus products from overseas. Now, a lot of that has to do with the dollar, but the trade gap shrank to 29.4 billion in October, the narrowest gap, as I mentioned, since 2009, and a 39% decrease from September at 48 billion. Why that's such a big deal? It does mean this idea of a renaissance in U.S. manufacturing has a potential to succeed. And don't get me wrong, there's things in this number that cause variances month to month. October is not a big inventory month. We're going to see inventory restocking happening after the folks that tried to get in front of the tariff announcement. So we'll probably see a lot of inventory restocking, which means bringing things in from overseas. So there's an old saying in Wall Street, don't let 1 month dictate what's really happening out there, or don't split hairs with just 1 month of data. It's got to be a smoothing of the data to make sure it's real. But imports did decrease a bit there, so we'll take that as a real positive. Okay, now I want to do something that's my economic data and my quick intro, relatively quick intro. I can't help but laugh at myself. One of the data point that's out there that I do want to hit on is that there are some things to think about for 2026. And why I mention this. As of right now, what we're seeing is real GDP for the third quarter of 2025 grew at 4.3%. It's an incredible number. Expectations were that we wouldn't even grow at 3%. That number is far above it. Now, hold on. There's some stuff in that number. There was a government shutdown in there to the beginnings of it. There was other data points that were maybe not properly calculated during the shutdown. So let's take it with a grain of salt. But either way, it's a strong number, whatever the number might be. My point is, when it comes to 2026, if we can grow above 3% GDP, it really does change the trajectory of American economics. It allows us to maybe get to a balanced budget. Could you imagine that? Maybe we stop adding to our annual budget deficit. In that scenario, the dollar would strengthen a bit. Yield interest rates would probably go down because there would be a high demand for our debt. More buyers we have, the prices go higher and the yields go lower. So Q3 was an interesting phenomenon. And why I mentioned it, because soon we'll get Q4 data, the first look at it. And if Q4 data is even above 3%, and the way online spending went, 260 billion spent for the fourth quarter, near record number, probably $1 trillion in total sales for the fourth quarter, there's a chance fourth quarter may just come in above 3%. And if that's the case, then the U.S. economy really is set up to have a successful 2026, which is why small caps are up so much to start the year. And with the potential of lower interest rates, there's a believability that because of efficiencies we've learned, interest rates will continue to come down. They don't need to come down much. The Federal Reserve would probably cut at least 1 or 2 times in 2026, bringing interest rates, mortgages, credit card debt down significantly. Now, I tend not to get into some of the goofy headlines, but there's a couple of things I want to mention about 2026, and then I want to get into my themes. I think there's three things that have to happen in 2026 for the economy really grow at a rate that is exceptional. So the first one, does business investment really increase? And to be honest with you, I've talked a lot about that. But it seems like there is this desire to build the United States. I mentioned Nissan, I've mentioned AstraZeneca, I've mentioned chips in Arizona, chips in New Mexico. So there is this new renewed interest in building in the United States. And if that becomes clear in 2026, it's a game changer. Do tariffs get in the way of that? It doesn't look like it. I mentioned the Vietnam story last week about how Vietnam's winning in the trade war, even with a 20% tariff on it. Why? Because they're willing to pay 20% and take a lot of production from China. The second one, do trade flows normalize? And that means, do countries start to buy our stuff? Do we buy stuff from other countries? Do tariffs basically become not a non-issue? And so far, it seems that way. Pasta imported from Italy had a 90% tariff on it. It went back down to zero. Very important. You want to eat Italian pasta? It's very good for you. There's no ingredients in it but flour and water. It's an egg, maybe. And then finally, can consumers continue to support growth? Will consumers continue to spend? Will wage growth stay above the rate of inflation? And will those with all the money in the United States continue to spend that money? It's going to be a fascinating year for 2026. And I think there's a chance that some of these happen. I've talked a bit about this experiment of what it might be and what it would take for the experiment to work. Does growth really happen? Well, let's go through some of the things that I think might happen. So here's my themes for 2026. I won't spend a ton of time on them. They're available on our website, and more. They will be available. They're not there yet, but they'll be available for you to look at and have an understanding of what we think is going to happen in 2026. The first off, it's a defining year for artificial intelligence. And what that means effectively is that it's one thing to launch AI chatbots. It's a whole nother thing to use them. It's why I opened up today's podcast with my comment about 60% of Americans using it frequently. Will companies be able to become more productive? And will companies be able to to make more money using AI? Will AI companies, which have cost about $1 trillion to get up and running, become profitable? And beyond that, will we find the electricity we need to make it work? So this is a year that define the impact of AI. And so far, when you ask companies, they all admit to using them, but most say it's had little to no impact on production, 0 to 5%, but up to as much as 40% of their workforce is starting to use it. So it's a defining year. But one fun thing about it, if you looked at the hallucinations of AI today, the best of them, which is Perplexity, still hallucinates of 1,500 questions it was asked. 37% of the answers were wrong. Gronk 3, 94% were wrong. So it's a great story about AI, but we're not quite there yet on what it really is. Theme 2, market breadth will widen. That's specifically along the lines of small caps, and case in point with small caps up over 5% on the year, doubling the S&P 500. That's a pretty exciting sign. But I think the reason why, when interest rates go lower, and they've already been lowered, and you get a better, stronger U.S. economy based on the things I mentioned, a manufacturing renaissance, a no hire, no fire scenario, wages above the rate of inflation, other stocks in the marketplace will benefit from it. And in fact, if you look at Liberation Day forward, the winner between small cap stocks and the S&P 500 clearly was small cap. So we think that trend continues, that there'll be other opportunities in the marketplace. Theme 3, that when we think about GDP, we do think GDP is going to continue to impress. Now, I'm going to keep it modest and say it's going to grow by more than 2%, which is really the historical trend. I think GDP can grow closer to 2.5% in 2026. And if some of those things I talked about earlier work and we grow at 3%, oh boy, that would be pretty impressive. So in other words, I'm willing to bet that the one big, beautiful bill will generate great growth for the U.S. economy in the form of lower taxes, so wages, overtime, the ability to build a new building for your company and write off all the costs immediately, and some of the other benefits around childcare and so on. I think that will benefit the U.S. economy. Salt taxes. I live in New Jersey. We're going from 10% salt tax to 40%. That's a significant increase. So I think that's a tailwind for the U.S. economy and why it's going to grow. Number 4, commodities. I've grown up in my career after doing this for 36 years. I'm in my 36th year. There have been periods of time, they're usually 5 to 8 years long, where commodities are all the rage. Think about the 70s, the early 2000s, and we think commodities are the rage again. And the reason why, critical minerals. China has a very strong grip on critical minerals. They tend to be able to produce all the critical minerals you need in things like cell phones and fighter planes and everything in between. So there's going to be a need for other countries like the United States, like Australia, to step in and create or mine their own critical minerals. Venezuela has one of the largest gold deposits in the world. Not really a critical mineral, but certainly an example of it. So there'll be this opportunity to get critical minerals somewhere else. And I think it makes commodities in themselves in great demand. Whether it's building data centers or new electrical grids or electric cars, or everything in between, critical minerals will matter. I think it comes in the form of commodities. Number 5, international markets continue to see strong performance. Why? So as an example, government fixed spending in 2026 could exceed 9% in Europe, which would be more than the US and the UK. That's the first time that's happened in decades. Normally, government spending in Europe is a fraction of what the U.S. spends. So, for example, from 2002 to 2007, U.S. spent 6% on average. UK, 14%, huge spending out of the UK. Europe was only at 4%. And in fact, Japan was negative 6%. So we think there's an opportunity finally, because whether it's spending on defense or in and of itself, it's spending on trying to get install the Mario Draghi, the former head of the ECB's plan to deregulate. We think that's going to have an impact, and Europe continues to grow. Stock valuations are better there. So for that reason, for us, it makes sense to have an investment overseas. In fact, today, that's something we're proud that we added back in the fall. Number 6, in my last theme, and then I'll just give you some things to consider. Basically, fixed income, boring old fixed income. We like bonds. Bonds that are almost 8% return last year. They're up 0.25 this year. We like bonds because you get a wonderful yield, and you got a chance to see your prices go higher and as interest rates go lower. And why will rates go lower? Let's just connect the dots. If the U.S. economy does well, U.S. bonds will be very in vogue. People are going to want to buy them. The more people that buy them, the more in demand they are, the more prices go higher and interest rates go lower. You win in the form of getting a quality yield in your bond portfolio, 3.5% to 5%, depending on what you buy. And then you'll see the price of your bonds improve as well. So for that, we think bonds are cool again. And then just some fun topics we think you keep an eye on. You're going to hear a lot about private equity this year. That's the idea of private equity meant for Main Street. More to come on that. I'm a little concerned about it, but you'll hear more and more about the ability to invest in private sectors because the public sector isn't what it once was. Then I think this year's dynamics around labor will be fascinating. The reason why is because natural-born babies in the United States were only 519,000 last year. We're at but we had 2.8 people coming in the form of immigrants. You see, you need population to grow in order to pay taxes and generate revenue. So I think this is going to be a very important one. What happens to the population growth in the United States? Do we get to finally an immigration policy that allows us to bring in a couple million people? Or do we close the border permanently, which could be very damaging in the form of, can we get population growth that we have to replace boomers who are aging out? And if we don't, I think it's very dangerous. And the last one, there's this boom in new things, where there's something called active ETFs, where they're replacing mutual funds, and someone like me is inside of an exchange-traded fund actively trading it. Normally, they were just mimicking an index. Whether it's cryptocurrencies and what might happen there and what the evolution might be, whether it's stablecoin. Great story about Venezuela has a stablecoin that the now arrested President Maduro created, and why it's relatively important, because it's pegged to the US dollar. So while their currency is falling apart, you could trade in stable coins and not have an issue. Very exciting. I think stable coins are a big part of it. So those are my themes for the year. As a quick recap, I'll go through them real quick again. 2006 is a year that will defining year for artificial intelligence. Can it make money? Market breadth will widen by things other than the Mag 7. GDP of the United States is 2% or greater. Commodities are a very effective asset class. International stocks continue to perform well. Bonds are great in a portfolio again. And then some things to watch, like stable coins. Well, that's a mouthful. Hopefully you all enjoyed my 2026 outlook. We know we went over the 2025 outlook last week. I'm sorry, look back last week. And hopefully these are things that you use to help create guardrails. These are not permanent decisions. These are guardrails. These are things that you would put on the side of the road. So when you're driving on the highway, you'll stay on the road. Maybe you bounce off of them from time to time. You're creating a dent or two. But certainly you want to look at them as a starting point, not an end point. Use them as a way to think about how you would rebuild or build your portfolio. And more importantly, things you want to keep an eye on, which can help you guide or change your portfolio as things develop. That's what these are for. All right, so the two last fun things. First off, the pizza industry is in trouble. It was once the biggest restaurant industry in the country. It's fallen all the way to 6. I guess people just want to be more healthy. I saw there was a great piece about beans. Now beans are the superfood that people are falling in love with beans again. Why? Because they're packed with fiber and protein. If you look at the Chipotle menu, it now has, believe it or not, an entire category of protein-based things at Chipotle. McDonald's has a drink that's a protein-based drink. We're all going to be protein addicts, I guess. So the pizza industry is in trouble. And, as an Italian guy who loves pizza, I once had a friend called pizza the food of the gods. I think that's correct. To me, there's nothing like a great slice of pizza. So if folks want a little bit less, and I understand it, but to me, pizza is still the greatest food you can eat. Well, second favorite after pasta. And then finally, my shout out of the week. I have to tell you, I'm watching the Venezuela situation, and I think it's fascinating to keep an eye on. I really do. I really do think it's a fascinating topic. So this week, I'm going to give my shout out of the week to Maria Corina Machado. Maria Corina Machado is the woman who, she's a formidable person. She won the Nobel Peace Prize because she was the candidate going up against Maduro in the last election. She clearly won the last election. And to prove she won, they took all the ballots, escaped out of the country, had them audited, and proved that she won the election by a landslide. She's been fighting the fight against the Maduro regime for a decade. She is a woman in a country that is very anti-women, from the idea of what happens to young women in Venezuela. So I give her a ton of credit for fighting the fight and continuing to be in it. And while at some point I would imagine, I don't know that she's going to be installed. I don't know what the president's thinking, but in a fair election, I think she would win pretty much hands down for what everything we've read so far. But it's probably a ways away if we have a fair and democratic election there. On the other hand, I'll throw half a shout out to Delcy Rodriguez. Delcy Rodriguez is the new president of Venezuela. She was Maduro's right-hand person. But to give Delcy credit, she is willing to fly to Washington and come up with an agreement. She's already begun to release political prisoners that were locked up by Maduro, and willing to have a conversation about what a United States guided world in Venezuela would look like and how she can participate. So credit to two women in a country that's not known for its success of women, certainly not known for its support of women. Well, I do think my shout out goes to Miss Machado, but you got to give Miss Rodriguez credit too for recognizing this change coming and being in front of it. Lots of fun week. I listened to a few of my own podcasts, and I realized sometimes, I've always been a classic mumbler. Forgive me. I don't know. It's because of the deepness of my voice, speaking too quickly, or just going, not being good about my pronunciation. So my 2026 goal, I didn't have kind of a goal for this year, a personal one. I didn't have what are they called when you have that's things you do on New Year's Eve. Resolution. Forgive me. I didn't have a good resolution for this year. I do want to lose some weight. I've gained a little weight, so I don't want to lose some weight, but everybody does that. That's not bad. But my resolution this year will be to slow down a little bit, work on my pronunciation, and make sure this podcast can be as good as possible. So for that, I would ask you, don't be afraid to send me your questions or comments. I'm out there on Instagram. I'm out there on LinkedIn. You can email me. You'll find me anywhere you want. Or just give me a call. I won't give out my phone number, but you're welcome to look that up too. It's out there in the world as well. With that, everybody, have a wonderful week. I look forward to talking to you next week Lots of fun things going on. Enjoy January. I like January. I know that most people don't. I like January because it's cool, it's crisp. We get some snow. The month I don't like is March. But did you know one last thing? We're getting 1.38 seconds of daylight more every single day. Last night driving down the highway at about 5:20, it was still a little bit of light in the sky. It's coming. The longest day of the year is just around the corner. Take care, everybody. Have a great week. Bye-bye.